Welcome back everyone, this is Investor Ben, and this video is the continuation from the part 1. But in this video, we are going to look out for buy and sell side liquidity with correlation to FVGs, which is also called fair value gaps. So stick with me to the end of this video and you would learn how to trade fair value gaps and as well as understand what a buy and sell side liquidities are and how to trade them effectively to avoid being stopped out in the charts. Now let's dive in real quick.
Okay, looking at this structure here, right? Let's just try to analyze from here, right? I'll be taking from here. I don't want to look further into the other place. Yeah, so let's take a look at this structure from this point to the current price that BTC is at, right? Yeah, so let's start by marking our levels. Remember, if you go to my status, there was something I posted today about rule number 1 and rule number 2, right? And I said in rule number 1, before trying to make a trade, the first rule you should take note of is identify your targets first. Identify your targets before looking for entries, right? Rule number 1 states that identify your targets first. Where is this price likely to go, right? You mark out your structures, you mark out everywhere before looking for entry, right? And after marking out everything, what do? Then you then figure out an entry, right? And the entry will be like, how can I join this move? How can I join this move? How can I partake in this move that price is creating, right? Yeah, so with that way, you are much free to execute your trade rightly. Yeah. But then if you just bump into your chart and the next thing you saw another block, and boom, you've marked out this other block. Okay, let me use this one that invalidated. You marked another block, you just came to your chart and you're like, yeah, price broke structure first time and second time. Okay, let's do some ignorant analysis. You'll be like, price broke structure first time and second time. And what next will price do? Price will mitigate from this, let me take this into the upside. Price broke structure twice, and then next thing you try to do is you try to sell from this POI and price takes you out, right? Price took out liquidity from that high, and that is the buy side liquidity being taken out and filling the fair value gap. So you'll be taken out crazily, right? Most of the times your entry may be right. Your entry will be right on a normal state. Look at your entry will be right, but then because you didn't try to like evaluate everything on the chart to see how the structures are being represented in the charts, you just went to like go straight to taking that trade. So you may end up being taken out. Yeah. So whenever you try to take a trade, don't forget rule number 1. Okay, so let me ask you guys, who can tell me? Okay, rule number 2, exactly. Someone here is following you very well. The rule number 2 is don't forget to follow rule number 1. Yeah, this person has my contact on WhatsApp. Yeah, it's crazy. So never forget rule number 1. It will help you real bad, right? Yeah, so you first of all identify your targets. Where is this price likely to go? Then you figure out an entry. How can I join this move? Right? Yeah. So let's try to do some things on the chart. Let's try to do some things on this chart. So do not try to be like, oh my God, I got to place the trade. You may end up losing your money and your money will go for vanishing in the market. Yeah, you'll be a liquidity provider, while the people trading against you will be eating from your money. And if care is not taken, you'll be doing the same thing over and over again because you want to revenge the fuck out of the market and you may end up losing your money repeatedly. Yeah, so you don't try to do that. First of all, follow rule number 1. Identify everything that you could see on the chart. Don't try to force anything. Just identify what you could just open in the charts and then they are visible, right? Things that you start forcing in the charts, they are no longer valid. Yeah, they are no longer valid. Probability that price will take out is low. This is 17,005. Yeah, price will take out is low. Same structure with Monero. I dropped the markup yesterday on my statistics on Monero. Yeah, that markup when I talked about on price algorithm on my status, algo and liquidity, I gave some tips on my status about how the algo flows. Yeah. So probably if you have my contact saved, you should know what I'm talking about. So let's try to identify everything, right? This is your previous day low, your previous day low, previous day low. This is your previous day low at this point. Let's target. Okay, your previous day low. Let me type. I want to say several things just on this chart. Hope 30 minutes will be enough. Let's see. Because I have spaces to attend. I have three spaces. I think one was not in. Let's see how this goes. Okay, maybe tomorrow. Yeah, tomorrow. Yeah, so this is your previous day low. Previous day low. Your previous day low at this point. Who is asking if FBG is same as smart money concept? Then smart money concept is just like more of like a bigger way this banks trade. Smart money concepts, when you hear of SMC, right? SMC is more of like how the banks trade, how the hedge funds, how they carry out the activities. Yeah. Then these strategies are ways to take a trade, right? So it's far different from you calling SMC. So SMC, this thing, SMC doesn't have anything like FVG. Is in ICT concept, you will see FVG there. Yeah, so is other blocks same as fair value gap? Please, I'm not answering question right now. Yeah, let's try to look at structures. Keep your questions. When at the end of this section, I'll try to provide time for questions and answers. Yeah, so possibly ask me your question at the end of the section, but don't try to interrupt the section with your questions because I'll barely ignore them. I'll ignore all of them. Yeah. Yeah, so let's look at our structures by identifying all of them using row 1 and row 2, right? This is your low at this point, your previous day low, right? Previous day low, PDL, right? And this is your high at this point. This is your high at this point. This is your previous day high, right? We can call this thing a buy side liquidity. And the buy side liquidity was taken out, right? Yeah, so let's tag this thing as a previous day high, right? And to your left, I'm keeping it at the left top. Yeah, your previous day high at this point, right? Let me make this previous day look quite big. Okay, your previous day high at this point and your previous day low at this point, right? Yeah, so I won't explain previous day high and previous day low. Maybe tomorrow the same structure will break it down in terms of liquidity, right? Yeah, so price took out this high at this point, right? Price took out this high at this point. Okay, we are not through it identifying our structures. So let's try to identify all of them. Let's try to identify all our structures. All our structures. All right, yeah, let me use this thing to mark every G. Okay, I'm using this thing to mark every G. Fair value. We are still on fair value gap, right? Every G, fair value gap and imbalances. Middle, inside. Okay, every G, and this was an every G, right? Yeah, so let's bring out all our structures, a fair value gap at this point inside. I'm identifying your structures, everything in this chart, yeah. Okay, and we have your low at this point. Right, yeah, so let's get started now. Yeah, let's get started. So we have price coming down from this downtrend, right? We are on an impulsive downtrend, right? These are impulsive move to the downside, right? And price, if you are trading, right? If you are trading, and whenever you try to make a trade from a supply zone, right? Let me give you another hint before I continue. Whenever you try to make a trade from your supply zone and price is coming to your entry with an impulsive move, right? Probability that that move we get, that POI will get scattered. Yeah. And price is coming to your POI with an impulsive move like this. Probability that this thing will get scattered, like price may take you out, right? This will be your inducement, and at this point, I'm trying to show you something for a reason. Probability that price will take you out, like price will snipe that thing out before dumping, right? Yeah. So whenever price should come to your entry, it should come to that entry with a retracement, right? It shouldn't come impulsively. I mean, when I talk of retracement, you should know about expansion and retracement, right? This is a retracement. Price should be coming there with a retracement, just like how price did here before selling again. If price had come here with an impulsive move, is likely to scatter of these FVGs. But then price was coming there with a retracement before selling swiftly, right? The reason is this: when price is coming with a retracement, it will be building liquidity, right here. So I will try to pause here because I'm not supposed to be treating liquidity here. So, and we have such movements here. Price is coming to this fair value gap. There are two FVG at this point. Price is coming to this FVG with a retracement. These are retracements, right? All of this move here. These are all retracements. In a bear market, right? All of these move to the upside are all retracement. These are retracements, and this is an impulsive move, right? Yeah, so these are retracement at this point. So price was creating an uptrend retracement, right? Because totally we are in a downtrend. So this move here are retracements for a sell, right? And as price is retracing, price is building liquidity structures for you. Price is building up liquidity. And now liquidity is not just equal highs and lows. Liquidity is far bigger than equal highs and lows that or trendline liquidity, just plain like that. Yeah. So we have other liquidities at this point, right? Price took our liquidity from this high. It's inside the same FVG, right? Price was inside the same FVG and was taking on all of these actions, right? When you see price here, let's try to make this mark out. And I don't start. Previous day, PDL stands for previous day low, right? Yeah, so previous day low. So look at a red flag that this structure wouldn't hold. If you are thought about break of market structure, if you know break of market structure, structures that we are taking out with wicks are not really strong. They are weak BOS, right? Structures being broken with wicks are not really strong, right? And look at all of these things. They are being taken out. This one was really impulsive candlestick that price created, right? Price created an impulsive candlestick here that broke this side. And after that break, we had a weak break, at this point. We had a weak break, right? Majorly, all of these weak break are very risky to trade. They signify reversals. When you see price breaking with an impulsive move and all of a sudden starts breaking highs with weeks, price is likely to reverse, right? Yeah, so we had those weak breaks here. Like I said, if you spam me with FBG, previous day low, you're not following. As thank you, he's not following, not at all. Yeah, so we see price creating highs at this point, but then there is one thing in these highs. These highs are not being broken impulsively, right? They are all being broken with wicks, candlestick wick, right? You know what a wick is, or a shadow, right? And this one was the only one that got broken with body. The next one was taken out with just a little wick at that end, a little wick at this end. And then when price wanted to reverse, it took out the high at this point, the previous day high at this point before reversing. And what did price do? Look at the rejections at that point, right? Look at these rejections. These rejections at this point, all these candlestick rejections before price dumped. After price dumped, we got provided with a bearish candlestick at this point. This is a bearish engulfing candlestick, your order block for a sell, right? Remember, I told you this thing that demand and supply zones are not just other blocks. Yeah. If you listen to me when I say the first section, right? Demand and supply zones are bigger than just other blocks, right? A demand zone could be a breaker block, right? A demand zone could be a breaker block could be used as a demand zone, right? A breaker block could be used as a supply zone. A fair value gap could be used as a supply zone. A fair value gap could be used as a demand zone, right? Yeah, other blocks could be used as a demand and supply zones, but then majorly you all know about other blocks alone being used as a demand and supply zone, right? A good example is here. At this point here, the other block was used, sorry, the fair value gap at this point was used as a supply zone to sell this market. Same as this one. The fair value gap at this point was used as a supply zone to sell the market to the downside. By peradventure, if we are at this point in price, we'd have taken this entry here because you will think that price will come and meet, price will tap on the supply zone before selling. But here, to prove you wrong, price sold from a fair value gap and then we had a drastic dump, right? And we are yet to don't finish. Yeah, so moving forward, after price took out this, let me try to scroll. We have several things to do. Yeah, after price took out this side, what happened? We started dumping, just like what happened there. Whenever price takes out all of those highs, there are liquidity in them, right? And when price takes them out, we tend to reverse, right? Yeah, so price took out this high out, this high at that point, and we reversed. Now, if I were here, I was totally here when this move happened. I wouldn't have used this thing. I wouldn't have used this thing. Somebody asked me this question one time like that. If fair value gap is on top of your other block, would you take it? I told the person no, because the other block, as both of them are supply zones, one will be used as an inducement to the other, right? One will be used as an inducement. And when two POIs are close to each other, the first one will be taken out first, right? The first one will be used as an inducement to the other one. And this was the kind of movement that occurred at this point. This first supply zone here was used as an inducement, right? And this second fair value gap, a supply zone, was what sold the market to the downside. Yeah. And we got provided with another FVG at this point, with another FVG at this point, with another FVG at this point in price, right? And this FVG here sold the market and we took out a low, right? When highs or lows are being taken out, price will reverse. We had such movements again. Tomorrow we talk on liquidity very well. So we had a low being taken out say, and what the price do? Price went to the upside, right? Price went to the upside. Even if price won't go to the upside like this, price can actually just make a move to the upside before dumping back, right? Yeah. And take notes, if you are trying to long your swing, there are two ways that price will move from here. Either price dumps from here to take out this low, maybe reverse a little, or we move here to fill in this FVG, then dump here to clear the low, right here. So we can actually come here, fill the FVG before clearing this low, or clear this low first before filling the FVG. Yeah, so the questions. No recording, recorded sections for you. Yeah, it's being recorded, but it won't be dropped. Yeah. So these are the markups you have at this point. Every markups you have at this point. Yeah. So let's scroll lower to lower time frame. We've been doing all of these things in higher time frame, in daily time frame. Yeah. So let's scroll lower to lower time frame. And between, let's try to take a look at these structures. Whenever prices, okay, we were having BOS at this point, a break of market structure to the downside, right? Right? A break of market structure to the downside, a break of market structure to the downside. Yeah, so these are your downtrend features. This breaker block didn't hold at all, but if you should look at this thing, there was a reaction at this point, right? Yeah, so let's scroll to lower time frame to do some things on lower time frame. Somebody is asking for me to screenshot this markup and send to the group. Okay, you need the markup some minutes because I'm good at clearing everything. Let me add my name. Yeah, so I'll be sending the markup to you. Let's scroll to lower time frame. So I'll be clearing all of these things in the chat. I won't drop recording. I won't drop any. Yeah, so let's clear all of them, remove drawing. Yeah, so let's scroll to lower time frame, 4 hour time frame, and see what has been happening there. Quite interesting. Okay, so okay, let's look at the structures at this point. Okay, so we are at an uptrend at this point, right? And a full uptrend, a clear one, right? An uptrend at this point in price, an uptrend, price was breaking highs and everything, right here. So, and we had such movements like this. Look at fair value gaps being present in all of these things. If you see FVG before your entry, that is a good confirmation. That will serve as an inducement for you. That will serve as a good distance to you, right here. So that will serve as a good option for you, right? And after this FVG, this is an FVG, and we had a demand zone at this point to buy from, right? We had a demand zone at this point, and price bought from that demand zone to the upside, right? Probably I wouldn't have taken this thing because we haven't broken high, right? Yeah, so I would wait for a high to get taken out. We had a BOS at this point, right? And as this BOS was created, price filled with this demand zone, all these demands on here. I had this trade, I took this trade, right? Price field, they did demand zone, and your target should be the previous high, right? Okay, now let's look at inside this structure before price got filled at that point. We also had a minor move here. We had a minor move at this point where price filled it an FVG, right? This is an FVG at this point. This is an FVG at this point in price. This is an FVG at this point in price. So this FVG here literally got filled. Let me try to mark this FVG with these things. Yeah, so this FVG here literally got tapped on and went to the upside, right? This FVG comprises of both an FVG and an order block at this point, both FVG and an order block at that point. Some persons here at some spaces here, there are several spaces being hosted today, several spaces, so many spaces here. Das has a space today, crypto analysts, several of them. Yeah, so I should be in them. And there are some persons are in. Yeah, so we had this fair value gap mitigation at this point, this FVG mitigation at this point, and price starting into the FVG and the other block before going to the upside. Okay, now we broke structure, we broke this high, price came back, mitigated this point in price before before buying to the upside, before buying to the upside. So let's keep showing you minor examples. Okay, here it didn't hold. Price took out every high here, every low here. So let's keep showing their examples. I'm looking for examples with fair value gap, not just with other blocks, right? Adding all of these examples on FVG. Here is an FVG and they all get filled up, right? Price filled this one completely and even scattering the FVG. Yeah, so let's look at some other structures like this. This thing will be ending in next 10 minutes. I have some setups to talk about on Monero. Yeah. So now when you might have heard of the word order flow, right? We had something like that here. We had something like an order flow at this point, right? We had something like an order flow at this point, right? So we were breaking highs at this point. First high was taken out here. Second high was taken out here, right? This high here was taken out. And we had another high being taken out at this point. We had another high being taken out at this point, right? And then this high, as it got taken out, price came back and mitigated and bought from this high at this point, right? Price bought from this high at this point before going to the upside. Now your entry will not be from this high. your entry will not be from this demand zone that broke the high. Your entry will be from this next candlestick that mitigated that demand zone, right? Your entry will be from this next candlestick at this point. This next candlestick at this point that mitigated the demand zone, right? Yeah, so this is an example of what an order flow looks like. You are trying to trade a demand chain, right? Yeah, so this is it that you have here, and we have price buying from there. We had price buying from that zone to the upside. Recall, don't go and set your TP title. Price will snipe you out. Price and your take profit will be that high, or you can use 1:5 preferably, right? 1:5, or you use the high as your take profit target. Yeah. So let's continue what we are doing. Okay, so look at an example that price wants to reverse. If you look at the beginning of this video, I said something about when price starts breaking highs with wicks. Whenever price starts breaking highs with wicks, example, we have one here, we have another at this point. We had another at this point. Price was breaking those highs with wicks. It wasn't an impulsive break, right? And what happened? We started reversing because there is no too much buying activities going on again. This is like the daily time frame analysis. There are not too much buying activities going on again in price, and we started reversing to the downside. We started reversing to the downside. This is an FVG. We had another one at this point. We had another one at this point, and this was used as an inducement for the second one. Price tapped on this second one before selling to the downside. Yeah, so let's continue with our structures. Structures here aren't clear. No, I won't be using these ones. I have less than 6 minutes, so I want to host more sections because I have spaces to speak on. Yeah, so let's try to look at these things here. An FVG was created at this point in price. If you observe this thing here, an FVG was created there, that price tapped on. Price filled that FVG. Price filled this FVG at this point, right? Price filled that FVG by tapping on it, by tapping on this FVG before we sold to the downside, right? And as we are selling, look at the sell order flow. First of all, it was from an FVG, and this FVG sold price, right? We broke structure. Control. Yeah, we broke structure at this point, right? We took out that low. We took out this low. We took out this low. Then we took out another low. All these lows, all these weak lows, yeah, we took them all out. And we had price selling from this point, selling from this POI, right? Price selling from this POI. And as price mitigated this supply zone, price sold to the downside. And in the process, price took out this high inclusively. Price took out this low, right? And what happened next? We had a liquidity grab from this low, previous day low again. This is a previous day low. We had a liquidity grab from this previous day low. This week here, there is liquidity lying there, and this candlestick was responsible for grabbing the liquidity lying at that point. Yeah, they are all applicable to lower time frame. Yeah, so we had price coming back here, mitigating from this zone. Sorry, price clearing liquidity from this low. And what happened? We happened to sell again from this supply zone order flow, right? This supply zone order flow here. Remember, this supply zone order flow at this point. So this is your supply zone here, and we happen to sell at this point say in price. We happen to sell at this point in price. Give space for your this thing. And as price took out this low, your next target will be this low. In a downtrend, price will be breaking lows. So your take profit targets will be on those lows, right? Don't set take profit targets in a region that is not identified. So you set your take profit target at this low because we broke two lows. So you're expecting price to mitigate from this zone and then clear this low again. So, and that was the kind of action we took here. Right? So yeah, let me go to 15 minutes time frame for the trade I took yesterday night. Can I still see that setup? Okay. The trade I took yesterday night, it has a nice structure, like quite a good structure in it. Okay, so let's look at the structures there. Seems like I should end this section and host another one since we are ending this in 3 minutes time. Yeah, the next session will be basically on questions and then we summarize them. Ending this.